Hi, Bhuvanji. You are most welcome. And we have heard and seen you working with Client First, rather leading the Client First company for investments. I want to ask you, when did you really exactly think of Client First?
I think there's a very long discussion on my mind, which was going on before I started Client First. So, if you see, I'm not from the sales background. And when I joined a local bank here in 2007 and 8, people were minting money in properties. And when you join fresh from the MBA college, it was a campus placement, you have no idea what you are getting into. You're just following your seniors and trying to do something. And I had no idea how to ask for money because my father was a government servant and all his life he only distributed money. He still keep donating. And I think as I told you, he's written more than 26 books. So my challenge was how to ask for money. Somehow I learned it. And then I realized that the investing is a two people journey. It is the client who also wants something. And I learned it. But then I'm a very emotional person. If I get connected to somebody, I have connected. And the best way to survive in a relationship is to be honest and then perform. Both are important. So I worked for a bank for roughly 11 years and have made a lot of emotional connections. Clients get connected, they talk in the night, in the evening, we talk other subjects, we talk about each and our mistakes. All that happens, and I'm sure you agree that in the last 2 minutes, that signature, the sign happens on the investment. So when I left the bank, I was only working for one bank, have to taken 3 promotions. Now I have realized that you or people like you are a better relationship manager. Why? Because you meet 20 people in a day and they are meeting you for last 10, 20, 40 years. So when I went to my clients before leaving the job, I saw that they were already got two relationship managers changed after me and they've already opened accounts in the other banks and they are fed up. So from the heart, the voice came is we are going to create a distinction because everybody else is selling some or the other product. So basically, they are blowing the trumpet of the companies, the corporates. Who is representing the client? And we said we will turn the table and we will represent the client. We will be honest to them and we will openly tell them what are we making out of selling them a product. And that has changed the whole game.
Very nice. But when was that? You remember the year or
Yeah,
the
so we
day?
started the company in February 2015. And like a a middle class person, I thought of starting the business with even having $1 saving because Bhuvan Gupta will never be born again in the another life with the same name and with the same creed and the country, etc. So I said that this has to be now. So 2015 February, it is incepted in my mind, and the May we started the Client First.
Very nice. Now, finally, having built and led this firm in your opinion, what are the top three non-negotiable qualities of a great leader that you are now?
No, I'm not a great. Still a student of the investing in life. I think the most important thing is have the commitment. All of us have to have the commitment. Then is most important is the courage, and the third is the ethics. These three things are non-negotiable. So why to commit? Because it has to be always working on the reverse order, top down. Where I want to go, it has to be decided. Dan Sullivan, who is the author of 2x versus 10x, says, I do not want to coach entrepreneurs who do not have a mission. So, to go very far in life, you need to be committed. And after that commitment, now courage automatically will come. And in that courage, you will develop capability and capacity, but don't take shortcuts. What I've learned from my mistakes also, that you should be ethical and be ready to do the work which is difficult. So we tell people investing is simple but not easy. People try to make it easy and they end up making it complex. So that's what my take to it.
See, this reminds me of our another similarity. I was in a Hyderabad school of Dadas, and which was in the initial period had 700-800 students. Today it has close to 3,000 students, one of the largest schools of Hyderabad. And there I learned they have a 4 C's principle in Dada's schools.
Okay.
So these 2 C's were same, courage and
Commitment.
commitment.
Yeah.
Other 2 C's were character and compassion.
Wow. Wow. That's also something I think very important.
So the thing was character that you said in commitment. So character and commitment, whatever you are committed.
Ethics has covered the character.
So even when I make my financials, I always try to remember what are my commitments, where I have to give money. I mean, to the people I borrowed from or whatever. I make that list first. I forget many names from where I have to receive the money, and I don't mind and don't care about it. So this is another similarity between us.
Thank you.
Commitment.
Great to know that.
Very nice. So how has been your client first commitment influence the free structure of your firm?
Yes. So I believe I'm not that person who innovates like Elon Musk is, let's say, doing something different. I wanted to have a model and wanted to copy somebody who's noble. And Warren Buffett, I always keep him around me. He had from 1957 to 69 Buffett partnership. And the partnership is again something, ek akela thak jayega, saath hi haath badhana. That's a very important thing. We all are trying to fight alone. There's no need. If you bring more people together, good people, ethical people, you will do it properly. And in fact, compassion, which you just talked about, and the love will also be there. So Buffett used to charge 6% hurdle, 0 fees, and 25% performance fee. 1957 to 69, he did it. Before dissolving Buffett partnership, and he started a company he acquired a company called Berkshire Hathaway. And I said, this is an amazing model. It suits me. And in this journey, I also happened to go through his disciples who themselves are billionaires. And one of them is I think I should say, I am from that city. So we're from the same city. So when you have a person who is a billionaire and very simple and from the same city, and you are looking for that kind of person, it admires you most. And I happened to meet him. And I said, wow, a billionaire is so simple. And simplicity suits me. I cannot fake. I don't think I have in myself. So Buffett's partnership is what, with a small tweak of 1% fixed fee and 5% hurdle and 20% performance fee, I started. And as I went on the journey, I realized that we are very unique in this region because people are busy in charging the transactions or not telling the fees. So I think that is what has made us to click. And 2019 we started unofficially, and 20 we incepted Client First Capital, and we have never looked back from there.
Wonderful, excellent. So long as you stick to your character and stick to the promise given, you will not fail. But also remember, Dada used to say, you are master of your unspoken word, and you are a slave of your spoken word.
Awesome, absolutely.
So if you're given a word, then you are a slave of it. But good job. What is your philosophy on the ideal client to advisor ratio, and how do you ensure that ratio is financially sustainable without compromising service quality?
Yeah, so I think it depends on the product. So if you have a product which is long term, I have my seniors who are 13 people managing $13 billion. I have a person, Monish, who is very famous in the circle, Monish Pobre. He's one person managing $1 billion. And then I have a very good friend, Chris Mayer, who is again one person managing $400 million. It all depends on the nature of the product. If you have the transparency and communication correct in the era of technology and the AI, I think a client and advisor ratio of 1 is, and then again depending on the client size also. Let's say they are managing HNI. One client is very good with 50 to 60 people. After that, it is better to have an advisor for the more clients to acquire, because I think it's also a personal relationship, because I believe the relationship manager owns the client. And I think we all, when we shift or we change our banks, the clients are our my baap. They are the main people. So I think 50 to 60 clients per advisors are good to go. An advisor should also have an assistant, because a lot of time these advisors can do the job which is to be done by the assistant in the office. So if an assistant is there, 40 to 50 client per advisor is a great ratio.
Do you really have that like a relationship manager to the client? Because I don't see anybody else except you.
Yeah, so we do have. Now we have 4 people, and then I think I take a proud that people internally have been promoted. And the challenge why we are not sending other people to you, because I think the product manager like me, and you meet my colleague also, they themselves manage a relationship. And when we look for hiring the more people with a higher salary, the challenge again is same, Mr. Shivlani, that they have a short-term focus. They want to get incentive every quarter. Now we don't pay that. The reason why you have, or everybody else around us, and let me say nobody has lost money with us in the last 5.5, 5, 6 years, is that not an advisor is coming to you. Because once he comes to you, what happens is he keep shuffling or keep switching the products. So that is why you made money. So we are now hiring people, but our hiring is very stringent, because we are looking for people who are long-term focused. So it is more of a relationship where we need entrepreneurship kind of people who understand that there could be a year when the bonus will not come, because not every year will be hunky dory, and stock market is not like a straight line. Yeah. So this is what we're doing, and it's a tough job, but I think we're doing it. But again, we are going to restrict ourselves to 3 to 4 people.
Yeah, that's nice. I also used to tell my people, senior people particularly, that we are not here with anybody's guarantee that we will make money and profit in each and every product that we are dealing with. So keep other thing also in your mind. When the product is not being responded, even in the loss, you have to sell it. So you have to accept the loss with the same spirit and smile as you accept the profit.
Absolutely.
So this is how it should be taught.
Yeah, in fact, I want to add here that why we all go wrong in equity, because we deal with it as a real estate. So there used to be a time when people bought properties in Dubai and in the other region, and they did not do well. 10 years they keep the property, and then on a 10 million they got an 11 million total value, and they sold it. Today that property is worth 25, 30 million. But in the stock, if you have bought a company at $100 and it has become 50 or 40, it won't come up on its own, because every stock has a business inside it. And if the business is not doing well, it will suddenly go to zero. So it is very important to cut the weed and not the winner. I'm sure everybody would have had Nvidia, Apple, Tesla in their life, but they would have sold it like you told me. They would have sold it not knowing the worth of the company. So it is very important to understand that equities are the reverse way of dealing with the investment.
I want to ask you this question, which although I asked you before personally, but I want viewers to know.
Sure.
Is you operate with 10, 12 or 15 companies. How many companies?
10 companies.
10 companies. Yeah. You operate with like 10 companies mindsets. This 10 companies will do good.
I want to have 5, Mr. Shivlani.
You want to have 5.
I will tell you again one example. There's a person called Nick Sleeper and Zakaria. They're very famous people. They are not very known in the public, but people admire in the value investing circle. They are spending their life in racing track. One fine day, they achieve more than $1 billion AUM. Their net worth would have been $100 million. They closed the fund. They wrote to Buffett that we are going to be a permanent shareholder. We are closing down the fund, but our money is going back to you. So basically, they have invested into 4 companies. So 2 of the companies I know of record, Amazon and Berkshire Hathaway, and 2 more they had. And they closed it down. Now, why do I have 10 companies? As you rightly said, the focus. Focus is very important. Now, if I have 14, 15 or 20, you have at least 95% of the fund manager doing so. And probably that is why the overachievement is not happening. Now, 10 doesn't mean the risk is more, and 20 doesn't mean the risk is less. If you do not know what you're buying, even 20 is a risk. Like I think I give a very good example, and it's from the politics. Against the NDA, there were 20 plus parties alliance was there. Today, look what's happening. That one is enough for them. So now we have 10 those kind of hidden gems. So I think one who will go. So I think there's again one very good saying that 1 mile deep and the 1 centimeter wide, or you would like to be 1 mile wide and 1 inch deep. So this is what it is. So these 10 companies are debt free. They are more than 10 years old. The CEOs and the founders run these businesses. So I think even 10 is more.
Okay. You didn't let me complete the question.
Sorry,
but
please.
that's the quality of Bhuvan. He has so much information to share. My question was, you have 10 companies and 10 companies are progressing, assuming they are making a 5%, 10% profit. After 2 years, you see one company has gone up. What would you generally do? Keep it or sell? Suppose it has become double. So instead of 10%, it is now taking maybe 16% space in your thing because it is double.
Yeah.
What would you do?
Okay, so I'm happy that you're saying it is a company, because actually the stock has gone up.
Yeah.
The company we don't know yet.
Yeah.
So I will be reading the business and I will see the business, whether the business is capable to do furthermore. Ms. Shivlani, I think a very important difference between a company like Apple and a commodity company, that Apple kills its product every 3 years. If you are a fan of Apple and if you have an iPhone, I can vouch this is not iPhone 14 or 15 or 13. You used to have iPod those days. iPod is no more there. Apple is changing the company, and now we all are also using a lot of apps where Apple is making money from them. So what is happening that every 3 years the company itself is changing. So I should be reading the company again instead of looking at the profit. But I should be happy that it is above, it is up. And if it is because of the wrong reason, I will sell it.
But my point was this company is still good, like other companies are good. Other companies are making 5 to 20% profit. This company has doubled, and therefore space in your thing is 15, 16%. So would you level it to be uniform with other companies and sell the up?
No, I'll not do that.
At least, no?
No, I'll not do it immediately unless it becomes, let's say, 50, 60, 70% of it. Now, I'll tell you the reason behind it, that when Buffett bought American Express and Coca-Cola, if you go back to the history, he started with 25% of all his money, and because he was so confident, and then it went up to 45, 50% of the portfolio. So, by the way, it's a good question. I actually go back to this every night, and I think that, is it high risk at that price? Because now it is 3x or 4x in the portfolio. But when I'm convinced it is low risk, and that is why I dig deeper, and then I went, and I think you're happy also because of that. And a lot of people have showed me, and they have come back to me saying that, how can you have this company 30% in your portfolio? But I think if you go deep, then the answer changes. And this company cannot become zero for a simple reason. It is not a one-man army. It is not a one-mine company. And it doesn't have debt. And it has an amazing margin of safety. So let's take an example. If you gold price today, what do you think it is?
Yeah, 4,200 something.
What will be the cost of mining the gold for this company today?
$1,000 or less.
1,600. So it may become half. I agree. That's possible. That will be temporary, or that could be temporary. But even if that becomes half, it is giving you at least 100% return or 200% return. So that is the risk you always take. But at some point of time, when the gold cycle will complete, you may have to sell off the whole company.